Welcome to the SoCal Real Estate Development and Syndication Podcast, from blueprints to skylines, where we interview the go-getters in the industry. I'm your host, Peter Barakoff. Today's guest is Tony Johnson, general contractor, commercial real estate investor. Thanks for coming on, Tony. How are you?
Fantastic, man. Thank you so much for having me. You're up and early this morning.
That's right. You got it. Yeah, early bird gets the worm. Uh,
That's right.
uh, Tony, you're a general contractor. What did you do before becoming a GC?
Before becoming a GC, I was a bartender and then I managed bars. Then I opened a bar with some friends. And so that was my first taste of entrepreneurship when it was probably about a month after I graduated college, and I partnered up with some other bartenders and we opened, and the bar did fantastic. The only problem was everybody that was my partners, all they did was get hammered every day while I did all the work and books, also getting hammered every day.
Oh, you're a
So
great partner.
yeah, yeah. So I learned real fast that, partnerships were just not for me. So once we were able to sell and get out of that after about 5.5 years of being in business, at that point, I'd found a girlfriend with the bar, and we were living together. And so I got a real job and I started selling building materials, and selling building materials in 2005, 6, and 7 in the run up to the crash. And so in 2007, I felt I knew enough dealing with contractors to start my own construction company. So that's what I did, in about 2007.
Okay. Well, what is your biggest obstacle as a GC over there in North Carolina?
My biggest obstacle as a GC is bidding against people um, that really need work. And so they're pricing it, below where I can do it for. So it's hard. And then it's hard or they're giving unrealistic budgets and allowances for items. And then being able to get the client to understand the challenges they're going to run into during construction and the value we add in shortening their timeline on building something out. Because we'll do it completely different because we have the manpower, which costs a little bit more, but allows them to open quicker and make money quicker.
Yeah. Well, what mistakes do real estate developers make when they come to you? And
Well, the biggest mistake most anybody makes, developer, entrepreneur that's coming to open a business or develop something, anything, the biggest mistake that they make would be underestimating the cost to get something done. And I think that's, a challenge for everyone. Everyone has a number in their head and they'll say that my number is high. And then when you break it down for them, what's the basis for it being high? As you delve deeper into it, they don't have that basis. It's just, a thought in their head of what they should be able to get it done for, and thinking people are charging them a lot of money, but it's just the cost of doing business. It's not trying to rake anyone under the coals. When you do something fair and honest and upfront, it's a challenge, because you're showing them the real price as opposed to giving them what's called a bait and switch, where you give them a really low price, get them in as a client, and then have an upset client at the end of the day.
yeah, yeah. What questions don't developers ask you, that you wish they would before, like, coming to you? Is there a question that you wish they would give to you that would really shine light on something?
Um, not a bunch of questions that I wish they would ask. It's just, understanding. I think understanding the timeline that things take is, especially these days, uh, I wish they would be a little more prepared for that. A lot of people are trying to do things and have an expedited timeline that's just not feasible this day and age, which is difficult. But, by and large, when you're dealing with an experienced developer, they are aware of that. It's not the developers that are doing this over and over again that are running in that you're running into those challenges with. It's the inexperienced first-time developer or inexperienced first-time business owner. That's where you run into the biggest challenge. People that have done it a few times normally understand the system, the timeline, the cost of things, the things that are required. It's the newer people and getting them to understand all these costs that they did not anticipate when they moved into a project. That's the biggest challenge, and you're kind of a heartbreaker for a lot of people in the initial stages.
Architects, what's the do's and don'ts of these guys? Finding one, working with them. Where do you come
Sure. Yeah.
from?
Just like with a contractor, an architect, it's imperative that you get an architect that is experienced, you know, in the type of division you're building within. So if it is commercial, residential, multifamily, hospitality, you want an architect that has done something similar. You don't want an architect that's designing houses every day to go design you a commercial building. They're going to run into too many challenges understanding the ADA compliance, the life safety, all of the different minutiae that are completely different from a residential to a commercial. So you want to find an architect that's specialized in the field with which you're trying to build or develop. That is critical. And then you want to kind of see their portfolio to make sure that their design and how they are going to, what their vision is going to match up with your vision. They might be more of a traditional designer and you might want more of a modern build, and they don't have that vision. If all they've done is design traditional structures and you're looking for something modern, that would not be the right architect. So it's kind of look at their historical patterns of what they've designed, and that way it makes sure it aligns with your vision.
Let's switch to our investing hats. All right. So what are you working on in your personal investments or in your own personal development in real
Sure.
estate now?
Right now, we're working on flex industrial. So small bay flex is really the niche I'm looking at, and we would look at retail if the right opportunity presents itself. We see the most opportunity right now in the flex industrial space in my area, small bay flex. And so, the challenge with that right now is finding the land at the proper cost. So when I'm underwriting that right now, first thing that we do is formulate a cost of the land. We kind of back into the land price that we can pay per acre. And so right now, we're between 50 to 75,000 an acre for it to work. And that's largely based on the area. Now, if you get in a certain zone, it's going to be much more, and a smaller, acreage, it's going to be more. So if you're buying 1 acre, you're not going to get 1 acre at 50 to 75,000. So you're going to need to be at 8 to 12 acres there. And then what else you're looking at is that you have utilities available. So you want to have water and sewer accessible on site. So, if you have water and sewer, but it's across a 4-lane highway, and that'll cost you maybe 300,000. So you have to anticipate that just to connect. So those are the biggest things, baby. Utilities and price per acre on the initial, and then you just have to verify that you don't have any major soil conditions, and you'll do that with a geotechnical study of the property that'll kind of tell you the soil composition. So those are the first steps.
Has being a general contractor helped you in your own investing? Kind of
Well,
just have
absolutely.
inside info.
Yeah, inside info. So there's a couple ways it helps. One, yes, inside information that I have had the test runs with other people's money. So I have gone using other people's money and been able to test these things out as opposed to my own money. So I've watched the pitfalls that others have encountered through doing the work for other people and been able to experience it while making some money, but seeing all of the hurdles that can come. What are the surprises that are going to come about that you might not have foreseen, that we learned as we went through. So that was probably the biggest thing that had allowed me to kind of get a leg up. another obvious leg up I get is, I have a contractor fee that I'm charging someone. So that fee allows me to almost double dip. So I can go in, buy a piece of property, and maybe I'm, 10 or 20% down, let's say. So if you're 20% down, I have 10% of it within my contractor fee, right? So then I get half price of what somebody else would have to put into it.
Mm. But you mentioned other people's money. Are you currently raising money for any of your own personal deals? Uh,
I do not. Stay within my lane. Now I work with people that's their lane. That's if, I would prefer to partner with somebody that their lane is raising money, and then partner
yeah,
with somebody that their lane is operating property management and keeping up with the rents and dealing with the tenants. Those are definitely not my specialty. So understanding where I fit in is important, and understanding that it works with a team to an extent, but the team has to kind of be vetted. So you want to understand what their strengths are, let them have a track record. Like I have a track record for construction. I want somebody with a track record for managing property, somebody with a track record for raising money. And then if we synergize together, then yeah, let's look at some deals.
yeah, that's right. Can you share a win or a successful story uh, in your journey so far?
A win in my journey of investing,
Yeah,
or
investing
my
or personal life doesn't matter.
um well, I feel like I'm winning every day, to be honest. I mean, I've
Oh,
got a wife and four kids. They're awesome. I enjoy spending time with them every day. I write down goals consistently, monthly, quarterly, check on them. We operate under what's called EOS, Entrepreneurial Operating System, and we run on a program 90.io, which is online, which what that does is keeps up with my goals weekly. We meet weekly and discuss our goals, how far we are towards achieving them. And so that really has been a huge win for me in life. I used to write goals every day since 2006. I would write the same goals every single day. And, when you visualize what you want in life, get clarity on your future. And if you can envision where you want to be in 5, 10 years, the clearer that vision is, the more of a guaranteed that you're going to envision and make that reality happen. So I basically visualize and write down and clarify everything that I want. And then it all comes to fruition. So we've exceeded all my goals I've ever written. And I continue to then escalate the goals to bigger and more extravagant. And the more clarity you have, once you set that trajectory for yourself, your subconscious mind will help you get there. So I'm a big advocate of that.
so it's that switch to mindset here. So things don't always go to plan in life or investing. How do you navigate through that? Do you continue to focus on your goals? What's the mindset there?
Well, I would say you're always going to hit hurdles. So you're always, just like right now, I'm trying to get in much better shape. I went running for 3 miles and I feel like then I messed up my calf, couldn't run anymore. So that just happened as you're getting older. So you're always going to run into challenges along the way. You have to just battle through those challenges, and having clarity, like I was saying, on a long-term goal. You're going to hit road bumps, but if you have a 5-year timeline to that goal and you hit a major road bump, let's say it delays you a year, you extend that timeline just another year. The goal is still going to happen. You're still going to get there, though you've hit that hurdle. It's easy to just extend the timeline. As long as you keep clarity on where you want to be, all you have to do is extend the timeline, and then it doesn't matter what challenges you hit.
Can you share a failure, maybe kind of something embarrassing or that you'd like to share that actually created, it was a stepping stone to success there? You don't
Um,
have to,
a
but
failure, stepping stone. So, well, I mean, I go through failures consistently. Right now, I am working to obtain my highway license to
oh,
do, roadways, railroads, bridges, and that would allow me to do flat work and utilities. So, I have been studying and trying, and I have failed the test 3 times. Now I'm
Oh,
scheduled to take the test again. The first time I failed it, I didn't even study at all. So that one, it was pretty much a guarantee. But the second one, I studied a little bit. I failed by 3 questions. This last time I failed by 1 question and then tried to dispute it, but it didn't work. So now I'm taking it for the 4th time. So that would be a
fourth,
failure.
fifth, don't
But
matter.
it doesn't really matter. Like I say, well, my goal is to have the license right now. And so what you do if you don't ever give up, you're really never failing. So
That's right.
though it's a bunch of short-term failures, but long-term still reach the goal.
Thank you for sharing that. Are you involved in any other deals, like maybe as an LP? Do you invest in outside any other
Uh,
groups?
I am not an LP. I don't want to be an LP. And I think that's just because I'm so embedded
Yeah.
in everything. I feel like I offer value. So I don't feel like my value is as an LP. I feel like my value is as a general partner to people. Now I
Oh,
do spend a lot of time kind of helping others and understand construction and cost basis if other are getting into it. Um, but as far as an LP, no, I'm working on multiple deals as a GP right now, and just some deals that are solely funded by myself.
uh, if you had to start all over again, your career, you're given $100,000. How would you put that money to work?
Oh boy, well, I was never given $100,000. I can tell you
Yeah,
that.
you're given
I mean,
$100,000. You have to start all over though.
if I had to start all over and I was given
Yeah.
$100,000, I think um, I would split that up and leverage that into probably um, depending on the market conditions, if that $100,000, it could go a lot farther 3 or 4 years ago than it could now. But if I had $100,000, I would definitely take that, buy 2 properties, and do a quick flip on them. And the idea is that when you have limited funds and you don't have any other funds coming in, so if that's my only $100,000, I want to get in and get out. So whatever I could get in on something small, so it would probably be houses, small houses, $100,000 $50,000 houses in bad shape, bad condition that I could go in, add value quickly, and flip them. So that would be the goal. And it wouldn't have to be some huge home run, but if I could just put in some money into that. And so I'd take the 100,000, probably put 25,000 into, 2 of them, and then have 25 budget for repairs. Then I would, if I needed more money, I'd go see if I could get hard money lender,
Uh-huh.
but I would take the 25,000 down on each property, do 25,000 in repairs, flip them, and then try and scale up from that and continue working and flipping homes until I could get to multifamily, flip multifamily, and then start building some revenue where I could hold some of those and get some continual cash flow.
Oh, thank you, Tony. How can listeners get a hold of you for any questions or investment opportunities?
You can always email me. It's Tony at timelesspropertiescc.com.
Great. Thank you so much, Tony.
Hey, Peter, thanks so much for having me, sir.
Thank you.